I think triangles are a very effective pattern in charts, and there are a number of different types of triangles. There are ascending triangles, descending triangles, and symmetrical triangles. And what we have here is an example of an ascending triangle. So an ascending triangle is categorized by a constant level across the top, where we have resistance being provided to this stock. In this particular case, it's at 445. But at the same time, the lows of the troughs here are increasing, and you can see that's been well summed up by this second yellow line here, which connects all these low points, all these troughs, and they are increasing. Yet at the same time, the peaks are remaining quite constant. So we have a situation here where we almost have a bit of a pressure cooker situation, where we're getting squeezed tighter and tighter and tighter up into this corner here, where the price wants to burst out and explode one way or the other. And what we find even in ascending triangles is generally, more often than not, the price tends to break higher rather than lower. And you can see, really just based on the pattern, the sellers, or the resistance to prices, are remaining quite constant. It's the buyers that are being more aggressive and are gaining the ascendancy, because they're forcing the low prices here higher and higher and higher. They're more aggressive, they're gaining the momentum, and generally ascending triangles break higher, as it has in this particular case, probably a little bit earlier than you would have expected it to. But just on triangles, and again, I guess like any chart pattern, confirmation is important to consider again. Many will see this and think, well, let's get in now. I can pay $4.40, $4.35, get it a little bit cheaper. But others, perhaps more prudent, will say, well, let's just wait for that resistance level to break and then get in the next day or the day after that, because now we have a far greater probability or chance of being in a profitable trade than perhaps if we bought it back down here, even though we would have got it cheaper and not, perhaps enjoyed a greater profit. But trading is more about probability than profitability. So we're not so much interested in profitability, we are more interested in probability, and I think that's a very important distinction that you need to make. One particular ascending triangle that I'm looking at right now is in this particular company here, and you can see this ascending triangle has been going over 12 months, whereas the previous one I showed you was only over the space of a couple of months. So this particular one, you can see the resistance level is again at a round number, $25, just nice and round. People congregate to round numbers, and we can see that level of resistance on several occasions, stopping the price moving any higher. But at the same time, these troughs, the lows here, are gaining. They're getting higher and higher and higher. Therefore, it's the buyers who are gaining momentum. There's a lot of demand building up for this particular security. I don't know when it will break. Chances are it will break, and if it does, it's something that is of interest to me, because we think that now the sky's the limit, and it will burst quite strongly from this ascending triangle and move on higher. Do we get it in now? Well, again, confirmation. I would prefer to see that resistance broken, because it may be another 12 months before it breaks. It probably won't be, but it may be. So I'd prefer to wait, because I want higher probability that stock is going to, in fact, go higher. Here's the example of the symmetrical triangle, and the difference between the ascending, descending, and the symmetrical triangle is the ascending and descending triangles have a constant, that whether it be the lower side of the triangle or the higher side, whereas the symmetrical triangle has two sides, as you can see in this example, which are moving or sloping. So we have here the top part of the triangle here moving down, and the lower part of the triangle moving up. And again, it's similar to the example I mentioned before. We're being squeezed into this corner, and the price wants to go one way or the other. And generally, the only way of determining perhaps the higher probability or chance of which direction it will break is perhaps the angle of these. If we had one that was particularly steep, and perhaps the I'll just grab the corner there. Perhaps the angle was something like this and far steeper compared to the other. You may argue that perhaps the tendency, because this side is being more aggressive and forcing the price in their direction with greater force, you would tend to think that the probability is it's going to break higher. In this particular case, you would say it's quite level, the angles, it's quite even. In this particular case, it did just break higher, and it's probably more so in this particular case that you would think about waiting for that confirmation, because it may break to the low side as well. Whichever way it breaks, it may provide you a great opportunity to initiate a trade based on that particular break, and this particular case it broke and really moved quite quickly, and the rest is history. The opposite to all this is the descending triangle. So it's the exact opposite of ascending. We have a constant sign. In this particular case, it's support for a stock. But the sellers, the people wanting to sell and placing great selling pressure, are being quite aggressive and forcing the price lower and lower, and then of course it just breaks lower again. And I also mentioned how we had perhaps a little area of consolidation here. We've had a decent fall, and that is considerable, from up around $4 to below $3 in a very short space of time. We've then gone through some consolidation, and however, it's just broken even lower and moved lower yet again. But I think triangles are a very effective chart pattern. There are many chart patterns out there, but I personally like triangles a great deal, and will often initiate trades based on breaks of ascending triangles, and I think they're quite an effective chart pattern.